All right, up to this point, we've built a complete accounting system. We've defined our accounts in the chart of accounts. We've recorded the transactions in the journal. We've organized everything in the ledger. We've verified it with a trial balance, and we've refined it using some adjusting entries. At this point, our system is not just balanced, it's accurate. So now we can finally answer the question, did we make money this period? And that's exactly what the income statement does. It evaluates performance over a period. The income statement is simple in structure. Income minus expenses is equal to net income. But what makes it powerful is that it reflects economic activity, not just cash. Because we've already adjusted for timing and matched income and expenses properly, this is the first time in the series that the numbers truly mean something. We're not guessing these numbers, we're pulling them directly from the adjusted trial balance. This is critical because the trial balance ensures consistency, the adjusting entries ensure accuracy. Now we extract only the accounts that relate to performance. The first thing that we do is we identify all of our revenue or income accounts. From your adjusted trial balance, you're going to look for income-related accounts. These are typically going to have a credit balance. Some examples include salary or employment income, side income, or when we get to it in another series, investment income. We group all of these together, and this becomes total revenue. Let's take a look at the spreadsheet at how we do this. All right, so we see here where we left off last time, which is our adjusted trial balance. And the revenue accounts that we are considering here for this demonstration is just the two that we have that are based on our journal entry. Okay, we received employment income, we received some side income. What we want to do is we want to organize these in our personal income statement. So we'll add a tab here, and we're going to rename this personal IS for income statement. Okay. Now, it's good form to add up at the top here what this is. So we're going to say personal income statement. And I'm just going to make this a little bit bigger. And we want to say for the month ending April 2026, or whatever the month is. Now, the format that we have these set up in, broadly speaking, is income minus expenses is equal to net income. Okay. Now, of course, we have a number of items that we have to include in each of these. So we're going to want to insert some rows here. So under the income category, and we're going to want to subtotal this as well. So total income, and then we can have expenses. We're actually going to add a lot of different fields here, so I'm just going to leave this blank for now. So what we're doing is we're just grabbing the names of these two from our adjusted trial balance. So I'm just going to click equals employment income, and then I can drag this down, and I've captured both of these. And then I can just add the values here. So income, there 5,000, side income here. And then we can do a subtotal as follows. So we know that all sources of income were 5,400 during this period. Next, we want to do it for our expenses. So again, we're going to grab our first expense here, and then we're going to drag this down. And I'm not sure exactly where it ends. Let's see here. Groceries. So 1, 2, 3, 4 more. So 1, 2, 3, 4. I think maybe one more. Yeah, there we go. Okay, so we've got all of the different values there. or pardon me, the names. Next, we want to grab the rent expense, which is right there. And we want to drag this all the way down to capture all of our different expenses there. Okay. And then just double check, make sure we've captured everything. Okay. So it's good. So now we are at a point where we can total our expenses. And you could just type equals, or you can go up and use the sum function. Again, just make sure that you're capturing only the values that are expenses. Press enter. Okay, and we have our net income value. And this is going to be equal to the difference between our total income minus our total expenses. Okay, so during this period of time, what this tells us is that our net worth increased based on our revenues and our expenses. Our net worth increased by $1,750. Okay, and I just like to format these in currency so that we have this all proper. Okay, so that's creating the personal income statement. It's relatively simple once we've got the adjusted trial balance set up correctly with all of the right journal entries, and our journal is set up correctly along with the structure that we've created throughout this series. So this works because we've already done the hard part. Without adjusting entries, expenses would be in the wrong period and income would be misaligned. But now we've matched revenue to when it's earned, in other words, when that economic value is created, and expenses to when they're incurred, or in other words, when the economic value is consumed. That's why this number matters. For personal finance, this tells you something powerful. Not just how much cash do I have, but am I actually building wealth or slowly losing it? Because you can have positive cash flow and still be losing money economically, or in other words, losing net worth, okay, or equity. And this statement solves that problem. Now we have something incredibly important, net income. But where does that go? How does it affect your overall financial position? In the next video, we answer that and we link this to net worth by building the balance sheet or the net worth statement. I'll see you there.